So let's get down into it. You are going to recognize some of these breakdown from the training that I do, especially with the team leaders when we're talking about those new loan applications that come in, that we have to give that initial assessment to our MLO as soon as possible when the loan application email comes in. So here, when the whole thing leads up to this, right? You have the technology, you have the lead, and now you have a borrower, our lead system, and now we have a borrower here, one of our leads that is active, reached out to us and wants some information. So maybe they reached out to us on our ad, and now we are reaching back out to them, calling them up to see how we can assist. So you want to gather as much information as possible to determine the viable, real important word there, the viable program options for the borrower before a quote is ever sent to that borrower, right? Just because they clicked on some ad and they told you more or less what they wanted to do. Oh, this borrower responded to my DSCR ad, and this is more or less what they said they wanted, but you just can't send them a random quote without speaking with them and finding out what is actually going on. That would make no sense. You would not be building any rapport, nor any trust nor loyalty from the borrower. You're just going to be a number, and that's not really what we want to be. So like I mentioned there, if you reach out to the borrower on that initial call, gather as much information as possible, you're going to build credibility, loyalty, trust, and very importantly, this is going to create sustainability in your career as an MLO. This is very important. I've been in the business 28 years. Now, in September, will be 29 years that I've been in the business, and still managed to hang in there because trying to handle the business a certain way so that I can create sustainability, right? Maintain yourself in the business, because the longer you're in the business, with more longevity, increases your operating efficiency and the per deal, including the effort that you're putting into each deal, right? Could be the third, fourth, or fifth time that you're doing that borrower's deal. And each time it becomes easier and usually bigger transactions. So we see how just handling your business in this way, just making that call, reaching out, you're already differentiating yourself from a lot of the application takers out there. So what are you going to discuss in that call that you're going to have with that borrower before you ever send them out a quote? And I understand sometimes they don't want to talk. Sometimes they just want to do it by text, do it by emails. Okay, that's a case-by-case situation, but preferably the communication, if you're going to be sending out by text, everything you need to tell them, it's going to be a lot of texting. It's going to be like one loan you're going to do in the whole day, just texting. I guess you can get a voice texting, right? So you're going to figure out what transaction type. Is it a purchase? Is it a refinance? Cash out refinance, rate and term refinance. And then depending on that is other questions you may need to ask. You definitely want to find out about their credit, but specifically certain items of the credit, like first and foremost, their credit score. And remember, ideally, there are 3 scores. Unless they have limited credit, they may only have 2 or 1 scores. Make sure to ask them if they have any of their bureaus frozen, because when it does come time to pull the credit, you want to make sure that those credit bureaus are unfrozen, or else you're going to have to be contacting back the credit reporting agency, asking them to re-pull the frozen bureau for an additional fee. Doesn't make sense for that extra time and effort if we determine from the beginning that they have some frozen bureaus that they can unfreeze at the click of a button before the credit report is pulled. So obviously scores, big part of it. Trade lines, how I like to ask them how many trade lines. Remember, the last thing I want to do is pull the credit. That comes at the very end once we asked all the questions we need to do to make sure we have some type of a loan. We don't pull the credit and then see if we have a loan. We have a loan, and then we have the borrower apply. And one of the steps when they apply to the mortgage calculator for a loan is to get the credit pulled at our expense. So again, trade lines, how many do they have? Credit cards, installment loans, student loans, deferred. accounts where they co-sign for somebody. If they co-sign, who's paying for it last 12 months, different things like that. So you know if you can exclude some liabilities to help with the DTI. And also to know if you even meet minimum trade line guidelines for certain programs. Now, some programs, non-QM programs, if you have 3 credit scores, there are no minimum trade line guidelines as long as you have 3 credit scores. But again, guideline specific items there that you would need to check the specific guidelines, all redundancy intended. You need to find out if there's any credit events. Now, what are credit events? Foreclosures, deed in lieu, short sales, bankruptcies, charge-offs, collections, judgments, tax liens, IRS tax. And then you want to find out, and remember, you're taking diligent notes through this process, right? Because you're taking these notes because you're talking, and this is an exchange of information. And then you want to find out what are the minimum monthly payments on their liabilities. And again, I know you're going to get all of this from the credit report, but remember, this is the initial, I guess if you want to call this the pre-qual, the precursor to the actual pre-approval, where you're jotting down your notes and seeing where they think they are based on the information that they're representing, which then will be documented by the actual information. But at least to know, so that you know if this is going to be a full doc borrower, alt doc, DSCR, whatever it is, so you can send all the relevant quotes that you can. But I'm getting ahead of myself there. Again, we're talking about minimum monthly payments on all their liabilities, credit cards, student loans, I mentioned all of that stuff. Then you want to touch on income and see what type of borrower they are. Are they self-employed or are they an employee? If they're an employee, are they salaried or are they hourly? Is there any variable income component, right? Like overtime, commission, tips, or bonus? Because then you want to find out if that's been going on for 2 years. If they change jobs, were they getting that type of variable income in their prior job that they're getting now? Because you're already thinking, I know I'm going to need a written VOE for this. But again, this is just right now based on initial intel that you're gathering, right? Just so you know, setting yourself up to have the good, relevant discussion. So then if they are self-employed, further, you need to discuss with them the need for tax returns if it's going to be a full doc loan, and also discuss what are the alt income doc options, such as bank statement and P&L, if the tax return income isn't up to the minimum required amounts. Because, they have a gross amount. You ask them what's your income, you're obviously going to ask them. If they're self-employed, they're going to tell you always the net income. They never, or the gross income. They never tell you the net income. But we go with the net income. But they're like, but why? Those are just my expenses. I'm like, yeah, exactly. Those are your expenses. We can't look at your gross income. That's what our bank statement program is for, or a P&L program is for example, for our self-employed borrowers that want their cash flow to be more representative of their income rather than what they're actually reporting to the Internal Revenue Service. So again, those are some of the income stuff that you're jotting notes down. You're doing your little outline. It's like, for me, it's like a flow chart that I'm writing down there. And then you go over assets. Now, if it's a purchase, that's why we found that if it's a purchase, assets are going to be more of an issue. And if it's a rate and term refi, assets is going to be more of an issue because you don't have any cash out proceeds. So you would need to have assets that are documented in wherever they have them: checking, savings, 401k, Robinhood, anything except crypto, unless it's in an actual crypto bank account in the US. So again, assets available for the transaction as needed. The source of the assets. Are they seasoned? We do have non-seasoned asset options, like in some of our DSCRs, don't require seasoning or sourcing, just being in the account. But again, that's why we ask all these questions, so then we can send the relevant quotes. And again, getting a little ahead of myself, but you see where this is going. The more intel that you gather, the more success you're going to have in meeting the objective of the mission. That's basically how it is. So then you want to find out if there's any gifts. Why do we want to find out if there's any gifts? Are they planning on having any gifts? Why? Because you want to avert any disasters that may happen when those gifts get transferred to the borrower in the improper manner, and then we can't document it. Like, my father is going to give me $5,000, so he gave me $5,000. How did he give it to me? Well, he gave me $5,000 in cash and I deposited in my account. Okay, did he withdraw that money, that 5,000 exactly from his account? Well, not exactly. He did a little bit over time. He had some sitting at home. I'm like, well, he should have just put it in his bank account and then given you the money. But in this case, now we can't document the $5,000. Now we got to wait 2 months for the money to season in your account, for example, for an FHA loan, as an example. Or so, depending on the seasoning requirements and gift requirements, is going to determine, again, relevant quotes that you're going to send. So as much information as you can gather up front, you can break it down for the borrower. You can empower them and help them make that educated and intelligent decision. They're going to thank you for it because they don't want to prematurely pull the trigger on something, then realize they got in over their head, and then they're going to be blaming you if anything happens, including foreclosure. And then we want to discuss the property. Again, this is maybe more relevant if it's a refinance or if it's a purchase where they already have a property. They may already be under contract and they're trying to pick who's the MLO that they're going to use, which company are they going to use to help them fund the deal. But if it's a TBD, obviously to be determined, no property yet selected, you can discuss what may affect the deal once they do find a property, but you're not necessarily going to have too much info there. But if it's a refi, for sure, you want to find out seasoning on title by the borrower, especially if it's a cash out refi. And if it's a purchase, you still need to find out seasoning on title by the seller. For example, for an FHA, there's the 90-day rule. You got to be on title at least 90 days, so you can't get into contract until the 91st day on an FHA property that's being flipped. And then once you do, there are certain requirements depending on the capital appreciation of the resale, may require 2 appraisals. So different things to consider there on seasoning on title if it's known. Number of units for consideration, LTV considerations, property condition to determine if you may have to go fix flip on the transaction, or renovation loan if it's a primary or second home. And we even have those one-time close loans, which we even have that for actually the renovation for investment. We have that for 1 unit investments, which is pretty cool. So a lot of stuff to consider here, like I was mentioning, that you can ask up front to build up your credibility with the borrower. That's key, building your credibility with the borrower. They stop shopping you around. They're not gonna nickel and dime you to death. They're gonna value your service, value your time, and that's critical because everybody wants the edge in this very competitive period in the real estate industry, right? Everybody wants that competitive edge, using the best real estate consultant and using the best loan consultant to help them meet their objective. And that's what we are all about at the Mortgage Calculator.